Hi everyone, welcome to Tuesday. Now, just before I jump across and do our normal review of the NZSX 50, I just want to remind you that this is going to be my last video for the year. I'm going to take a couple of weeks off. I've loved creating these. However, I have got some really good things planned for 2026. So do keep an eye out on my channel. I really want to help people with their financial literacy, to empower them with their money and take control and really make 2026 your best year ever. So do let me know in the comments as to what you would like to learn, because this is an area I'm really passionate about and I know I can help you. So let me know in the comments specifically what you would like to see, what you would like to learn, whether it's more on the share markets, whether it's things like derivative training, or if it's simply learning how to manage your money, how to pay off debt, how to pay that credit card off, home loan, how to set up an emergency fund, anything like that, let me know in the comments, because like I said, this is my year to really change things for you and to make it successful and empower you to create the lifestyle that you want. Right, now before I jump across and share my screen, just remember that this is for educational purposes only, definitely not intended to be personalised financial advice. Let's take a look at the performance of the main board for the New Zealand Stock Exchange. Now, I am recording this Tuesday morning, so that last little candle you can see there is for the trading day for just yesterday, being Monday the 22nd. And as you can see there, it's quite a strong, healthy candle, which is a really good thing to see. Other than that, last week we had obviously a down week, which is a little bit disappointing. And especially if we look down the bottom, there was quite a bit of volume there, which can potentially be a little bit of a negative. However, if I zoom in on that last candle, you can see that we've got quite a bit of a tail on it. Now, that does mean that there ended up being more buying pressure than what there was selling pressure. That in itself is a little bit of a positive sign. For me, because there's two red candles in a row, now whether that's on a weekly chart or a daily chart, for me, I don't want to look any further to see if there's any underlying individual shares that are potentially worth buying. Because to me, if the main board is having two negative weeks in a row, we just need to wait and see if it's going to play out into something a little bit more sinister or whether it's just perhaps a resettling. Now, if I just scroll back out, the thing that I thought was quite interesting, if I hold my cursor at around sort of the bottom area of those wicks, if you like, in the last sort of month, 2 months, you can see it's sitting on around 3,200. Now go across and look at the dotted line, and you can see that in around December last year, you can see that the share market hit it. And if I go along a bit further around this area here, which was in fact March through to September 2021, again, that market hit it. So to me, that is forming like initially a line of resistance, which potentially could be a line of support, which if that's the case, then that is a good positive sign. That's what we would like to see. Let's jump across and have a look at the 1 year chart, simply because it brings those candles up to daily candles. And look at yesterday. It's not giving me a volume down the bottom. However, that is a very, very strong, good candle. There were no wicks or tails, meaning that the market opened at that bottom level. So it opened at 13,333 and it closed at 13,508. That is a really good positive sign. Let's hope that continues. Now, while I'm on the daily chart, we'll just pop on our moving averages. Remember, I used the 30 exponential. And just for yesterday, the market did close above that 30-day moving average, which is a good sign. I definitely want to make sure that it's closing above that, though, for a few days first, rather than just 1 day. Let's also put on our 15-period moving average. Now, if I zoom in here, yes, the market yesterday closed above both of those moving averages. However, you can see with the blue line underneath, it hasn't yet crossed to the upside. So it hasn't crossed through that 30-day moving average. We definitely want to see that happen. Now, it's something that we want to keep an eye on both the daily signals and also the weekly signals. Even though I do most of my trading on a weekly basis, I like to look at the daily because it moves obviously a little bit quicker and it just confirms potentially what is happening. Let's pop on to the 5-year and just have a look there. And you can see if I zoom in that yes, the market's closed above that 15-period moving average. Those two moving averages haven't crossed to the downside, which is a good thing. However, we definitely want to see that it is trading up on that daily chart, which isn't doing so at the moment. Now, I'm just going to take both of those off, and I'm going to do a comparison with the smart share. It's FNZ. So it is the NZSX top 50 shares. However, it's an equal weight basis or thereabouts. What it's doing is it's having a maximum of 5% exposure to all of the strong shares. So the things like your Sparks and some of the utility companies and that sort of thing, which are our stronger companies on our stock exchange, it's bringing those down to a 5% weighting maximum, and it's obviously giving a little bit more weight to some of those lesser stocks that we've got. And you can see here that over a 5-year period, the equal weight has actually been down just over 10%, whilst the main board for the New Zealand Stock Exchange is up around 3.25%. Now, to have a good, strong, healthy market, we really do need to be seeing that equal weight portfolio as well performing strongly. It has ticked to the upside, but as you can see, it's a long way off where the main board is. So we just need to wait and see. Now, obviously, we've got a few holiday periods coming up. We've got a couple of days off this week, the same next week. The market tends to close a little bit earlier, usually like on Christmas Eve and New Year's Eve as well. Doesn't tend to be usually heaps of activity over that period, but we'll just keep an eye on things. But I can't wait to see you in the new year. Have a fabulous Christmas, and please let me know what you would like to learn more of next year, and we'll take it from there. I'd love to see you succeed. Thank you.